Nothing said or presented is to be considered as a finance or investment advice. And we'll focus in this session more on the history of money, crypto industry, and decentralized finance in general. I'm sure most of you people will be knowing this place. It's Goa's own mint house. It's also called House of Coins. And in Portuguese, if I'm not wrong, it's pronounced as Casa da Moeda. So it has also similar history. It was a private enterprise, or it was started by possibly a person named Goithilis. So yeah, just a short. So what to expect in this presentation? What is money? What is wrong with current financial system? Why gold and central banks failed? What is unique about gold? Gold versus Bitcoin? Value drivers of Bitcoin and crypto? Use cases of Bitcoin and crypto? And why government fiat is violent? Gold has limitations and Bitcoin has potential. So what is money? According to a Boston University professor, Mr. Perry Maherly, any form of credit is a money. So credit to a corporate, credit to a government, which is government bonds, or credit to bank, which is fixed deposit, is a form of money. Even cash and gold is considered as a money. There is a good level of hierarchy among this form of money, and when a crisis hits, people move from a lower form of money to a higher form of money. So when inflation or financial crisis or war hits, people move to cash. But when hyperinflation or those kind of ultimate crisis hits, something what happened in Germany after World War I, and something which happened recently in countries like Venezuela, or right now what is happening in Turkey, people move from cash to gold. So we say cash is the king, but actually cash is a false king, and gold is the king of money. Or I would maybe possibly say that gold used to be the king of money, and we'll look into why it has happened so. So what's wrong with the current financial system? When in 2020, when the COVID crisis hit, US Fed printed around $6 trillion of money in just few weeks. That is almost twice the size of Indian economy. And US Fed has been doing this since 2008 financial crisis. And what is the side effect of so much of printing of government money? So there is around $11 trillion of negative yielding government bonds, which practically means that people are lending to government at negative real and nominal interest rate. If you look at, if you read this book called History of Internet, which was written by a famous bond trader, Mr. Sidney Homer in 1960, you will see that kings and governments used to be a poor credit compared to commercial loans. Even kings and queens in London used to pay a higher interest rate, let's say somewhere around 15 to 30%, than a commercial loan, which used to be somewhere around 10 to 12%. And this was also the case even in India. Indian bankers lended money to East India Company compared to lending money to Mughal Empire or other Indian kings. And there was a logical reason for doing that. Even in Bible it's written that lend not to him who is mightier than thou. So whenever king debases the coins, replaces silver or gold content with cheap metal, or when the central bank prints money, it leads to inflation. So whenever US government or Fed prints billions and trillions of dollars, it's not just Americans who are paying the tax. It's the global citizen who is paying inflation tax to Uncle Sam. So this is the evolution of money. Initially, humans started using conch shells as a form of money. Then they shifted to salt as a form of money. And then gold coins and silver coins became a money. For last 100, 200 years, we have been using paper as a money, paper currency as a money. There is a history where China used to have a paper currency before Europe, or even the Americans used to have the paper money. Even credit card is a form of money, and now we are moving to a kind of digital or more open source neutral form of money. this also, we have moved from money as a physical form to a digital form. Most of our assets and money are right now already in a digital form, whether it's in a SBI or whether it's an ICICI or HDFC, it's all digital. So that transition happened in last 20 years. So most of our money and assets, let's say even stock, right now they are in a demat form, they are in digital form. So that transition for most of the humans have already happened. Most of the asset and money is already in form of digital. Now the only difference is those digital databases are with trusted third parties, which are banks like SBI or ICICI or NSDL or CDSL. Now what blockchain and crypto is revolutionizing is that instead of trusting this trusted third parties, you trust algorithm or neutral blockchains. So why gold and central banks failed? So before 1694, people used to use gold and silver coins as a medium of exchange and for the trades, which were a bit inconvenient. To carry gold coins and silver coins used to be a bit inconvenient. But with the invention of printing press, there came central banks. So people started depositing their gold coins and silver coins with the central bank, and central bank started giving or printed the paper receipts, which were initially warehouse receipts, and then later they transacted as a pound or as a paper currency, which were the liabilities of the central bank. So this continued until World War I, and then governments realized that instead of putting gold in a central bank, they can put government bonds in the central bank and issue more paper currency and fund the war. So this also went even in the World War II, and after World War II, Bretton Woods system was established, and under Bretton Woods system, dollar was supposed to be backed by gold, and all other currencies were to be backed by dollar. But then in 1971, Nixon took out the gold standard, or to say convertibility of gold of dollar into gold. So that's how the dollar standard came in existence after 1971. So when 2008 crisis hit, US Fed further diluted its balance sheet and started buying mortgage-backed securities, MBS, which are practically loans to the US household. And in 2020, US Fed further diluted its balance sheet by adding corporate bonds and junk bonds as well. Bank of Japan, which is maybe a decade ahead in all this experimentation, has been adding even the equity ETF on their balance sheet. So just imagine, Central Bank of Japan has been printing currency and buying the equity ETFs from the market, so which keeps the prices high. Even RBI has been chasing this race to dilution and has been adding non-gold assets on its balance sheet. And there's right now, this figure is not updated, but if I'm not wrong, there is already around $600 billion of reserves or the dollar assets on the RBI balance sheet. And even some of the prominent members of industry has been asking RBI to start buying the corporate bonds, which will possibly further dilute the RBI balance sheet and maybe even the Indian rupee. And all this dilution results or is being used for funding wars and bailouts, mostly for wars and bailouts. So this is how the gold and central bank failed. So now we can let's see what's so unique about gold. So gold is the only asset which is no one's liability. If you take stock, it is corporate's liability. If you take fixed deposits or bonds, it is government or it's a corporate's liability. Even real estate it's a liability on a government to enforce the property rights or the contract. If they don't enforce it, then even the real estate or property rights are almost zero. Only gold, which is also called as a bearer's asset, is without any liability. So to say it has a zero counterparty risk. So Bitcoin was designed with the same principle that if you hold Bitcoin in your self-custody, there is zero counterparty risk. There is an important fundamental principle in the crypto, which is not your keys, not your Bitcoin. So if you are, it's similar to if you are not holding your physical gold, it's not your gold. Same way, if you are not holding the digital private keys of crypto, then those coins are not your coins, or those assets are not your assets.